Well, hello everyone. Welcome to Trading a Smaller Account. This is an intermediate level class, and kind of the goal in this class, we started with a $25,000 portfolio at the beginning of the year. We place a lot of trades in this class. So this is a very active trading class, and placing trades is one piece of it. Following up on those trades is the other. And so today we're going to follow up on some trades that we placed in previous classes. If you want to get specific, there are 6 of those. And then we're looking to place 5 new trades. So I hope everybody is buckled up, ready to participate. We've got a huge amount to cover, as we always do in this class. I want to say hello to all the usual suspects. So to Kevin and Virgil and Connie and Frank and Will and Jay, and our first one into the chat today was Jack. So thank you all for bringing this class to life by being so participatory. We also have Mr. Brent Moores with us in the chat as well. He's a friend and a fellow coach, and one of the most even-tempered human beings I have ever known in my life. So if you've got questions, trust me, Brent will be happy to answer them and has, tons to bring to the table. So ask away. If you aren't following us on X, you're missing out. Barb Armstrong CS and Brent Moore CS. And just before we dive into the thick of things, know that options carry a high level of risk and aren't suitable for all investors. We do use a combination of stock trades and option trades in this class. So be prepared for that. If you're a first timer, welcome. So we've got Dennis here for the first time and probably several others. We're glad you're on board, and all I can say is keep coming back. So we use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and hone your skills. But know that there are some nuances and differences. One is that short positions will never be assigned early in Paper Money. That can happen in a live account. We're going to do a super quick market overview. We'll probably take less than 60 seconds on that. We're going to manage a couple of existing trades, and we're going to go back and forth between new trades and a little bit of trade management. And then we have one trade that we placed on Monday that hit our target. So we're going to do a quick, how do we calculate how that trade went? If you have never been to a live event, we have 3 coming up from now until the end of the year. First one is in Anaheim. It's a market drive. We go from what's happening in the market globally down to looking at individual stocks. We'll provide breakfast, lunch, and a great reception at the end of the day. And it's free, but you have to let us know you're coming, so we know how many we're putting the coffee on for in the morning. And then Houston, mid-December, that's an intro to technical analysis the first day, intro to options the second day. And then the weekend before Christmas, join us in Miami for advanced options. Both Ben Watson and I, along with a host of others, will be there. Chris said he's driving in from Dallas to go to the Houston event. We're thrilled that you're coming. We will be doing an event in Dallas in the first quarter. If you want to see those, Brent will put it into the chat, but type in coachschwab.com/coaching and go to live events. You can see everything that we have coming up in the first quarter. Okay. So here we go. Let's have a look. Let's bring up. Here's our S&P 500, and it is hitting an all-time high today, up 15% year to date. So, what can we say about this? It's bullish. It's hitting an all-time high today. So bullish, check one. How about our NASDAQ, which is our tech-heavy index, hitting a new all-time high today? So there's number 2, bullish. How about the Russell? Okay, not hitting an all-time high today, but I think if it were to close at the price it's currently trading at now, that would be an all-time closing high. So, hey, not too shabby. Within a stone's throw of the all-time intraday high, and the Dow 30 all-time high. So bullish. Hard to characterize it as anything but. Now, one of the things that we did on Monday, we put on 2 trades that were neutral. And not every stock is necessarily participating, in the bullish thing. But let's come and look at these two trades. So, and they're both iron condors. And so the idea with an iron condor, so Salesforce had been kind of rolling down the hill, and then it started consolidating. And so on Monday, it was kind of right in the middle of this range. And so we did an iron condor, which I like to affectionately refer to that as a credit spread sandwich. So what our expectation is that the stock was going to stay in between the two strikes and then, lickety split. So we have a short put vertical down here and a long call vertical up here. And then within 2 days, it comes up and pressures this short call vertical. But when we look at the individual sides, the short put vertical side, we sold this for 99 cents. We got a credit of 99 cents. And when I last looked at it, it was now trading at about 10. So we had put in an exit for the whole trade to say, hey, if we've got 80% of our max gain, we'd like to close it out. And on this side, we've got 90%. So we are going to go and close that out. Okay. So how do we do that? So if we look at this, so both of these are actually, we're up a little bit on both of them. And if we look at CRM, it was 325 minus 226. So that was the 99 cents. And then, it was 10 cents earlier this morning. It's now 59 minus 36. So 59 minus 36, 23. So what we might do with this is cancel this exit for CRM. We're just going to cancel it. And then when we come back and look at this, we're going to highlight this and create a closing order. And there's all kinds of choices here. We want to buy this vertical back. And it's now saying that the short put vertical is worth 23 cents. We want to get out at about 19. Like if we look at 99 cents, and if we said we wanted to get out at, 80% of that, we'd multiply it by 0.2, that would be 19.8. So we could round that to 20 and say, hey, if this gets to the point where it's worth 20 cents, we want to buy it back. Okay. So we're going to put that in. And then we could put in an exit. And this was a question that someone asked in one of the comments. Oh, look at that. We just got filled. So we are out of that one. Now we've got one side left. And so we could come in, and that's now at $1.65. So it looks like we're underwater on that, but we closed out the profitable side. But we could say, well, if this continues to, pull back, if I take that $1.10 times 0.2, we'd want to buy this back when it's worth about 22 cents. So we could put in an exit, anticipating or, being ready for that pullback. And if the trade, if it does go against us, then we can change our minds and exit. But this is called legging out. And so what's the other one is CrowdStrike. So let's come and look at the chart first. So we put this on Monday, and it was bouncing off support. And so one of the things we talked about was sometimes we can leg in where we add the short put vertical when it's bouncing off support, and then add the short call vertical if and when it comes up and bumps its head on this ceiling, which we were expecting to be here. But because there was such a high volatility on this, we were able to put the strikes, we chose to put the strikes out further, and now we're glad we did. But could we buy this back, like we did on the other one? And so if we come and we look at CrowdStrike, well, that was 1840 minus 1465 was the put side. So on that one, we received 375. of the 545, 375 of it came from the short put. And right now it's worth $1.20. So first thing this morning, it was $1.08. But if you said, well, 375, we're going to get time decay over the weekend. So if I took that 375 times 0.2, we'd want to get out for about 75 cents, not $1.20. And, you know, if we say, oh, if we're going to pay, well, our $1.18, $1.18 divided by what we paid to get in, that, or we're paid when we got in, that's about a 70% return. And so here's my question, first question, and I'd like participation. So do we take the 70% now and run, or do we put in an exit and say we want 80% of the max gain? And over the weekend, the expectation is that the time decay might help us get there. So here's the first, I'm going to put in a little poll. So this is for CrowdStrike. Exit the short put vertical side with 70% gain. You know, and this has to be a binary yes or no, or the corollary to that is, or wait for the 80%. And I'll go with whatever the majority comes up with. So please, you know, please vote. So Pro Caddy is saying, don't be greedy, take the money and run. So here's the chart. And we have this inverted kind of hammer, which might say, hey, maybe we're reaching a peak and we're about to come back down. I'm not trying to sway anybody's decision. But when we look at the other piece of information you may want to consider is that when we look at theta, it's about 23 cents a day this is going to lose in value, even if the price doesn't change. Okay. You know, so just put that in your pipe and smoke it. Okay. Now let's go, while you guys are all voting on that, there's one other one that I want to review, and then we'll go and place a couple of new trades. And we placed 3 trades on Monday. Zscaler was one. So let's look at the chart. So with Zscaler, what the Sam Hill? Okay. I thought I put Zscaler in. So with Zscaler, we placed this trade. It was on Monday, the 20th. And we were swinging on Monday. So we did 3 example swing trades where we said, hey, we just want we're just going for a base hit, my friends. You know, if it gets back up to this 319.50, and in fact, today it opened higher. It must have closed just shy of that. Yeah, it was 319.21 was the high. So it came like, oh, so close to hitting our target. And then this morning it opened at 321.38 and triggered our exit. So if we come to our monitor tab and the account statement, and I have in ZS, we had bought 16 shares. Why 16? Because we couldn't afford to buy 1,000. We paid $304 a share. We got out for $323.32. So in this case, it gapped up, and we got out a little higher than what we were expecting, you know, which is a beautiful thing, right? So how much did we make on this? Well, it's pretty easy to do the math on these. We just take our 304 that we paid to get in, subtract it from 323.32. I already did the math. It's $19.06 a share, 1906 times 16 shares. And if my calculator was not plagued by human error, that would be 304.96. And, you know, we started this class with 25,000 at the beginning of the year. So that's more than 1% of the total account value. So some would say like, hey, you know, that's a base hit. Others might call that a double. But it's a happy occasion. And in this case, because it was stock, there were no transaction fees. So Wiley, I have all the flags. I just haven't made it over to James's yet. But Tuesday, I have an appointment close to his house. So my plan is to take them then. But I've had like almost 4 dozen flags. I have Canadian flags, and James Boyd teases me about being a Canadian and mispronouncing flags. So I'm going to adorn his lawn with a bunch of flags. So shh, don't tell him. Okay. So that's CRM done, CrowdStrike. Okay, done. And so far the vote is 77%. Cue Steve Miller, take the money and run. So on CrowdStrike, we're going to do the same thing that we just did with CRM. We're going to cancel this order that we had in to exit the entire trade. Okay, we're going to come back down to our position, and now we can see no chiclet beside it. We're going to highlight it, right click, create a closing order, and we're just looking for the put vertical. So to buy the put vertical back at $1.20, okay, confirm and send. And so we've taken that unrealized gain and made an effort to try and turn it into a realized gain. And then, it could be that this would have expired worthless. And you might say, well, we could have made $120 more. That's true. And we could have, ended up taking a max loss too. Okay. So that's that one, and Zscaler. Okay, let's go and look at something new. And we're going to come to, what do we want to do first here? Let's do Marvell. Oops. I can type, honestly, I can. Okay, so when we look at Marvell, if we're playing I Spy with my little eye, what do you guys see there? Are you seeing what I'm seeing? Yeah, that I didn't shake my Etch-a-Sketch, right. Okay, so like I'm seeing this kind of cup and handle. And it's gone from 47 to 82, like, that's a big move, right? So 47, 57, 67, 77, like that's $35. And so some might say, well, I'm going to put a target here of 35. And we could do that. And we could buy some shares of stock, but we could also, if you're saying like, hey, that could take some time, and excuse me, darling, but I'm looking to make some money for Christmas because, my kids' list includes many items at the Apple Store. This is not a recommendation. I'm just making stuff up. But if you wanted to have a shorter term outlook, could we just buy some shares and say, hey, when it gets back up to 93, and right now it's at 85, so we're looking at maybe a target where you'd make $8 a share. And would we be okay with that? Well, if not, don't place the trade. But if we said, okay, well, how many shares could I buy if I were to do that? And do we have enough cash in the account? Well, we've got 16,000 and our max position size is $5,000. So if we wanted to do that, we could buy about 58 shares. So if we say, okay, well, if I buy 58 shares, this is my target. Where would I put my exit? Well, we say, okay, if you want, we could say, well, I see support here at this 82.97. If it goes 3% below that, I want out, times 0.97. So that would be 80.48. And then I'd want to look at this. Here's our recent low, 80. It closed at 81.05, but it went down to 79.06 here. Like when we zone in, it went down to 79.06. So we kind of hate to get like nicked out on a wick. So you might say, well, let's just put it like even 1% below that 79.06. And if it continues up, we can move the stop up. So you could do it, you can put your stop wherever you want. We could even say, we'll just put it $1 below that 79.06, make it 78.06. Okay, so we've got our exit, 78.06. And our target is going to be 93. So I'm going to come here, right click, because we're going to do this with stock. We're going to buy custom with an OCO bracket. So that means we're going to put in both a target and our target 93, and our exit was 78.06. And we're not doing 100 shares because that is too big a position size for us. We're doing 58. And then I'm clicking this firecracker and turning it into a paper clip. And then when I click anywhere on one of these 3 lines, it will even up the quantities. I'm going to make these days good till canceled, confirm and send. So, we're basically risking 721 for the opportunity to make 773. So it's about a 1-to-1 risk reward ratio. And if we're not cool with that, then we'd either have to adjust the stop or maybe not place the trade, or one could consider a higher target. And we looked at one way to consider a higher target. I'll show you another, but we're going to go with this stock with target, and this is a swing trade. So, and the reason we chose that is because Christmas is coming, and we're looking for a short-term gain. Okay, now we know that it could end up being a short-term loss. And somebody's saying, why shares? Could we do this with a long call? We could. Now, I have not been able to resolve my issue, but we could put in, if we wanted to do this with a long call, we could buy the long call and then put in a target. My issue is I can't, so let's just go ahead and buy this, and then we can compare it. And are we risking less than 500? We are, because how much of this could we lose? We could lose all of it. Okay. So confirm and send. And then what we're going to do is we're going to put in, so this is a long call. We're going to put in a swing target. And I'm going to have to put in our target after the class. I'll have to do it on another computer. I mean, it sounds wonky, but I'm having an issue with this screen. And I tried it before the class started, and I still am having issues getting that to work. So, but what can we do, if you live in a shoe and people keep stepping on you? What we're going to do is we're going to come up here, and I am going to put in a target and exit on this, but we're going to put in a little alert that'll come to your phone. It might text you, it might, depending on how you set it up, or email you to say, hey, exit the long call. So this is just a reminder on this, if it gets to our target, to exit. Okay, and so this is going to be our target, and then we can compare the long call and the trades we placed on Monday. We were going to do both long calls and long stocks. So the target will be the same. The stop with a swing trade on a long call, the stop will be at 50% of the value of the option. And so some might say, well, then why aren't you, why aren't you doing 2? Because if your stop is at 50%, then you're really only risking 250. But what if it gapped down? We could technically lose it all. So Jazz is saying, is the long call trade number 2? It wasn't intended to be my trade number 2, but it is our second trade. Okay, so that's Marvell. Now, seeing as we did a swing trade with this, and we're going to do another swing trade using stock, but on Monday we placed 3 stock trades with targets, Zscaler, Pinduoduo, and NVIDIA. Okay, so let's come and look at NVIDIA. And again, I was going to add the long calls because we got into a pickle with trying to put in the conditional order. So we put this in on Monday, and then it kind of pulled back, came back to this kind of similar bottom here, and kind of hung out along this row, but it's moving up again today. Now we're up a little bit on this trade. I'm just going to close this so it's not distracting. We're up a little bit, $45, but it hasn't moved all that much. And the idea here was swing trade just up to this previous high around 195. So could we do that with a long call? You might say, well, we have earnings coming up. Yes, it's November 19th. So in about 3 weeks, but you know what? Our expectation is that if it goes up and hits our target, it might do that prior to expiration or prior to earnings. And why would we care about that? Because often we see an earnings crush with volatility, and that lowers the value of options. So we'd like to be out of this prior to earnings. And so I will put in another alert to say, hey, if we do this as a long call, let's exit. Oh, sorry. I'm trying to talk and do things at the same time. Sometimes that doesn't work out so well for me. We're going to exit our long call, but because this is our target. But after the class, now, how would we do this? And it should work on yours. If we come to December, we're going to just put in 20 strikes. And we had a conversation about this. So the reason that I've got up the Greeks is because if we come to November, and we intend to be out by November 21st, we don't want to risk more than 500, right? So, or maybe we could go 550. So if we did this 195 strike, what does theta look like? Well, we've got 16 cents a day worth of time decay. Okay. But our delta is 37, which means if NVIDIA goes up by $1, the value of this option attributed to delta goes up by 37 cents. But every day we're in this trade, theta knocks 16 cents off its value. Now, if we come down to December and we look at, what we can afford. So let's go to 30. This is why I had 30 strikes. So if we come down, what we can afford is the 205 strike. And here, our theta is 10 cents a day. So like 6 cents a day less, that's pretty huge. Delta is 30. So delta is less, but kind of the amount you gain from the rise in the stock value of $1 is offset by what you lose in theta. But it also just gives us a little more time. So we're going to go with a December. Now, if you want to compare them, you could put in one for December and one for November, but we're just going to buy it. Now, if I were doing this and my system were working, I'd come down to single order, make it first trigger sequence, put in an opposite order, and then hit that little sprocket. But when I hit that sprocket to put in my target and exit, I've got some issue with this configuration and it's freezing. So I'm going to go to a different setup to do it after the class. But we'll put the trade in today, and then I'll put the exit in. Okay. And you guys can go back. If you go back prior to this week, this is our bread and butter. We do this all the time. And so we're going to put in this complementary trade on NVIDIA, and we are going to compare it. So this is a long call, and this is a swing target. And we're going to compare it to the long stock position. And so the target is going to be the same. It's going to be 195, which is what it is for the stock position. Okay. And the exit is going to be, we'll go look. It's a swing target. So it's going to be half the value of the option. So it's going to be at 260. If the option gets to 260, that's what it'll, we want to exit. Okay. So we've added a trade on NVIDIA. So there's that one. So that's trade number 3. We're doing pretty well. And we still have 15 minutes left. So woohoo, yay us. Okay. Now on the stock, our exit is at 173.74. So it's below this line here. Okay, and our target is going to be the same. Okay. Okay. So that's that one. Okay, so I got another question for you. So are you ready to vote again? Okay. So we're going to come down here to our buy right. And we have 2 buy rights. One is on Intel, and that's kind of coming along. So we did the 40 call, and we sold it for $2.70. It's worth $1.74. The stock is currently trading at $38.14. So it's pulled back a bit from where it opened. Oh, interesting. Because it opened like it was in the money the last time I looked at this, and now it's pulling back. But you know what? It's kind of doing what we were expecting it to do. But it's now kind of neutral. It's gone from, it's just gone from green to red. So it's kind of hovering here. So we're just going to let that one percolate. Now, the other one that we had in our buy right, which means we bought the stock and sold a covered call. So we had done this with Global Foundries, but you can see we don't have a covered call on now. And why is that? Because with GFS, and this is a stock that has a lot of volatility. Let me just say that right up front. And that was part of what made it look interesting. Oh, we need more. So we bought 100 shares of stock, sold a covered call on September 29th. On the 6th, we bought it back because we'd sold it for $1 and then it was worth 33 cents. So we bought it back and we sold the 40 call and it was trading at 37.24. So if we come and we look at GFS, so we sold it on this day and our thinking was a little different. We were thinking, well, we had this double bottom, it broke out, and then it had this inverted hammer. So we thought, well, it may well pull back. And if the expectation is that this support level might hold, then it will sell it here, buy it back when it comes back here. And so we bought it back on this day, which was when we were meeting as a class. And now it's kind of come up. Now, the reason this candle is dark green is because it opened at 36.19 and it's currently trading at 35.84. So we had a bullish engulfing pattern here at a support level and it's gapped up. And I just thought, well, I know they say curiosity killed the cat, but could we come out? Like, this seems like so far away. Like, it's over $4 away on a $36 stock. So it is far away. But when we come to the trade tab and we look at November, they give us 70 to 80 cents for that. And you may say, well, that's not much. It's a $35 stock, my friends. So this is, 2%. So my question is, do we wait and see if it goes up again on Monday? Or do we sell this covered call? Because the volatility here is 61.9% is the implied volatility. So here's question number 2. And this is on GFS. And again, it has to be a binary question, but it's like, do we sell the 40 covered call today? Or, do we wait? So do we sell it today? And I'll go with whatever, the majority goes for. And so we've already pocketed, based on the last one, we pocketed $67 less the transaction fees of 65 cents to sell it and 65 cents to buy it back. Okay, so let's go and look at another one of these. We're on our swing theme here. And we're going to look at RGTI. Kevin Horner was talking about a trip to Italy today. So I'm feeling like bringing out a bad accent, Rigetti Computing. But, we have this stock that's just had an extraordinary rise. And I'm looking at it like, well, it had this big pullback, like what's causing it to move again? And there's talk about, the Trump administration saying they're considering taking an equity stake. Now, if they change their mind over the weekend, the stock could tank, but what if it could come back up into this neighborhood of even call it 57? It's trading at $40 right now. And where might we put a stop? Well, earnings is the 11th, so we might want to sell a covered call when we get a little bit closer. But if we say, okay, our low here was 34.14, so we're going to look at a stop of 33.45, say 3% below that, and put in that target of 50, maybe not make it 58. What if we even made it 56? So I'm going to call that a swing target. So, and, let's see if this one has covered calls. I hadn't thought about that. Oh boy. At 47, RGTI. What did we say? 40. Oh, 56. Let's look. They pay us $2.52 at 54. So at 56, they'd pay us, between 209 and 222. So we're saying, hey, if it gets to $56 a share, we're willing, if you'd like to buy it from us for 56, we're willing to sell it to you, is what selling a covered call means. So maybe instead of just doing a swing trade, we turn it into a buy right and look to get this extra premium, because look at the volatility on this thing, 147%. So if we come in here and say, okay, we are willing to sell, well, actually, it's called buying covered stock. Change in plans. So 38.39, single order. You know what? I'm going to have to put in the exit afterwards. So yes, Andy, earnings is coming up. And it could be a bear flag. Chris is saying it almost looks like a bear flag. It could be a bear flag. Or it could just be that it's come down to this previous high here and come down and kissed it. So old resistance becoming new support and bouncing. So it could go either way. And you know what? Maybe we just stick with our original swing target. But you could do it both ways and then see. and and then just decide from there. But this has very rich premiums. And because of earnings, this, we would not be called out prior to earnings. So maybe we'll just go with the original plan of our swing trade. So we're buying custom with that OCO bracket. We're going to put in our exit at 56. That's our target. Now, what if it gets up to like 48? And then it looks like it's going to turn over. Could we, exit at that point? Sure, we could. And then our stop is going to be at 33.45. Oops. 33.45. And so these are the questions a trader has to evaluate and ask themselves. But if we're thinking, there can be big moves on based on news coming out. So it could come up and hit our target, and then who knows what can happen. Okay. Yeah, Trader Jane is saying, can resistance and support even make sense for meme stocks? And support and resistance is support and resistance. You may want to look at the short on this, how much short interest there is. And I'd have to go into the Schwab site to do that. And we don't have time to do that now, but this is another swing trade. And then the last one, we were going to sell that covered call. The vote so far is 72% yes, sell the covered call. And so we're going to come back to GFS. How many are we selling? We're selling one. Okay, so we're going to come to our trade tab. It was the GFS. It was the 40 call. So we're going to come to the trade tab. We're going to come to the 40 call. Now, could we come out to December? We could. But if there's more time decay, we're looking to, if it doesn't get up to 40, maybe we can earn some money on this and then sell another one out in December. It's kind of the thinking behind it. Let's see if we can get 75. And we're going to put that in our buy right group and send it in. So we got our 75. Okay, guys, we did a lot today. So we reviewed the trade on Zscaler that hit our target. We added a covered call to GFS, which was part of our strategy. We opened a swing trade on RGTI. We sold a call to go along with and be able to compare it to the stock trade that we did on Monday on NVIDIA, and we'll add our target and exit later. We did this, we also did a long call on Marvell. And then we're going to compare that to the stock position that we did, again, a swing trade. Okay, and then we closed the short put side on CRM, and we also have an exit in to close the short put side on our Iron Condor on CrowdStrike. So we covered a lot of different types of trading strategies, a lot of trade management, a lot of new trades. So I hope you found it helpful. One of the things that you'll notice is that Brent has reposted a couple of times a survey that was in the chat. So here's the deal with the survey. 2 questions. I feel like Richard Nixon, only 2 questions. 1, I hated it, 10, I loved it, and everything in between. Plus, you have the ability to put comments in. So let me know if there are topics you'd like me to cover in upcoming classes. I'm happy to do that. Was the pace okay? Too fast? Too slow? I promise if you put a comment in, both I and the management team will read it. And it helps me structure future classes. Hit the like button. It helps move this up in the trading algorithm so more people can find it. On YouTube, subscribe to the channel if you haven't done that already. And then don't forget to follow Brent and I in the land of X, Brent Moore CS, Barb Armstrong CS. Get out there and hug someone you love, my friends. Have a really awesome weekend. And I will look forward to seeing you in Trading a Smaller Account, the next session on Monday at the same time, high noon Eastern. Up next, is it you, Brent? Yeah, lots of great content still to come today, so stick around. Thanks to Brent for helping in the chat and to the guys behind the scenes for helping bring this class to life. Take care, everyone. Bye for now.